Okay, let's get back to crypto. Being a Friday, we like to wrap up the week. It has been an exciting week with Bitcoin topping 50,000 US dollars. Has since come off that, but the move took the overall value of crypto to $3 trillion. Let's get more. Ian Lowe joining us from Dacxi. Ian, good to talk to you again. Just before we get into some of those price movements that we've seen, I do notice that Deloitte has come out with its global blockchain survey. What's that revealed?
Yeah, sorry about the tech issues earlier. So look, a really interesting survey. And so to set the scene here on some of the key highlights of that survey, this is an annual survey that's done by Deloitte. It's a global survey. They survey just under 1,300 senior executives from around the world. Now, interestingly, they imply that the majority of those senior executives work in the finance sector, but they're also very clear that not all of them do. So we don't have the exact splits on that, but I think it's safe to say it's a fair representation of industry generally, but in particular the finance sector. So a couple of the key points. So 73% of those senior executives that were surveyed fear that their companies will fall behind if they fail to adopt virtual currencies and or blockchain technology. So, that's by any standard a significant majority. 76% of those same respondents believe that digital assets are going to replace fiat money in the next 5 to 10 years. Interestingly, that number is down from 83% in the year prior, but again, 76% is still by definition a strong majority. 43% of participants said that their own institutions should be adopting cryptocurrencies as a form of payment, which is very interesting. One additional insight here is that of the older respondents in the survey, 65% believed that their institution should adopt crypto as a form of payment. So that's a little counterintuitive. You would have thought that the younger the demographic, the more likely they would be to support adoption of crypto as a payment option, but that wasn't the case. And then on the risk side of the equation, those that believe that regulatory acceptance presents future risk for cryptocurrency went from 70% in the year prior down to 63%. So obviously that suggests that as regulators start to get more active in the space, the regulatory risk or the perception of that risk is seen to be decreasing.
Yeah.
My favourite quote, if I just quickly throw this in, my favourite quote from the report was the following. It said, "The end of physical money as we know it represents an overdue and now inevitable upgrade." So, Deloitte is a fairly conservative organisation. I think it would be fair to assume a number of the participants would be reasonably conservative in their views. But that's an unambiguous statement, isn't it, about the inevitability of that change?
Yeah, well, certainly when they're talking about it is inevitable. So there is a growing acceptance that this is going to happen, as what you said, between 5 and 10 years, that we'll see the full adoption there. But there's still so much to happen in that space as far as regulation is concerned, because it's still pretty wild out there, isn't it?
Well, look, I mean, the Wild West is a term that's often used, and I think if you look at the speed of maturity and sophistication that's surfacing in the blockchain industry widely, I think in some ways that misrepresents the industry. There are clearly still issues around nefarious actors, but in the end, if we compare that with the finance sector more generally, I'm not sure that it's necessarily significantly worse. I mean, we've seen incidents that AUSTRAC have named where banks have been responsible for hundreds of thousands of illicit transactions. So in other words, I think the fact that we are dealing with a technology where transactions are immutable, there's a permanent record of those transactions, using that level of transparency to point to cryptocurrencies being the Wild West is becoming, I think, increasingly inaccurate. That said, there are clearly still issues to be dealt with, and I think increasingly the industry is doing that.
All right, well, let's just take a look at the more immediate issues at how it's affecting the market and so on, just as far as some of the price movements are concerned. Now, Bitcoin having hit that psychological barrier of 50,000 US dollars, just tell us what's going on there at the moment as far as the trends that you're seeing.
Yeah, so I think most people would be aware Bitcoin earlier this week hit 50,000 US dollars, and it's trading just very close to that mark now, which gives it a market cap of 950 billion. Ethereum, as the number 2 coin by market cap, hit a mark of 3,800 US dollars, which gives it a market cap of 450 billion. So between the top 2 coins, a combined market cap of 1.4 trillion, which is obviously very significant. There is an element here, as you understand, where as Bitcoin price moves, it does pull the other majors with it. So, for example, over that same period, say the last week, for example, where Bitcoin strengthened, 18 of the top 20 coins strengthened in step with Bitcoin. So there is certainly that element of bringing the tide mark of the other major coins with it.
Yeah.
I think, look, Plan B, which are one of the leading crypto analysts, they've made some very bullish predictions for Bitcoin, particularly over the December quarter of this year. So if I just run through some of their numbers, August through to December, month on month, they've projected closing prices for Bitcoin of 47, 43, 47 at the end of August, that is. And by the way, they were spot on there. 43,000 at the end of September, 63 at the end of October, 98,000 at the end of November, and 135,000 at the end of December. So, look, everyone will reach their own view. Do we think that those numbers are going to be hit? Look, it's possible. It's certainly a very bullish view.
Yep.
But I think, the much more interesting cryptocurrency in recent weeks has probably been Ethereum, which is up 50% in the last 30 days. It's up 400% since the beginning of the year. Ethereum is a technology infrastructure, so it settles over $12 billion a day in transactions. Many cryptocurrencies are reliant on the Ethereum blockchain to operate. Most of the NFTs transact on the Ethereum blockchain. As we know, the London hard fork upgrade earlier this year, quite recently, is making Ethereum a much more efficient blockchain. It's making the cost of their transactions more predictable. And importantly, it's reducing the supply of Ethereum. So what that really does is support the price.
Yeah, so as you say, a lot of this is dependent on what's going on behind the scenes. That also applies to Cardano too, doesn't it? Because it's also looking for a smart contract update, which will allow the use of NFTs. So how important is that?
Well, Cardano is very, very similar in principle to Ethereum. It's a structural technology. And so if we look at the emergence of the internet, it's similar to, for example, the ISPs and the data centers and all the infrastructure that powered people's consumption of the internet. And so Ethereum, Cardano, which is really a fresh take on smart contracts, and again, that structural technology play, we expect them to do really well over the medium to long term. So, again, the view that we express, at least to our customers, is, you can spend a lot of time trying to be the smartest person to buy at the very bottom and sell at the very top. It's a bumpy ride. Take a medium to long term view, and structural plays such as Ethereum and Cardano, we think, represent really good value over that period.
Yeah, the long term, as you say, that plays into what we started with in this conversation, is that broader adoption that we're likely to see, particularly over the next 5 to 10 years. Ian, great to get the update from you. Thanks for joining us from Dacxi.
Good to talk to you.